Hello everyone, my name is Michelle and this is Personal Finance 101 with Partners Federal Credit Union. So the steps to taking control of your finances that we're going to cover today include establishing your budget, managing your debt, staying in control of your credit, and planning and preparing for your future. So when establishing your budget, you're going to want to determine what your wants and your needs are. You're also going to want to develop your cash flow plan, and that pretty much entails calculating what your net cash flow is. List all of your monthly income, list all of your monthly expenses, then subtract your expenses from your income to calculate your net cash flow income. Next, for establishing your budget, you're going to want to allocate your funds properly. And lastly, you'll want to establish an emergency readiness plan. So allocating your funds properly with the 50-30-20 rule is something we strongly encourage. With the 50-30-20 rule, you'll separate your expenses into 3 buckets. 50% of your income should go towards your needs. Everything you need to survive, your living expenses. Think your rent, your mortgage, your car payment, any loan payments that you have. All the expenses that you know have to be paid off each month. Your wants bucket will be 30% of your monthly income. That pretty much is anything that you want, entertainment, travel, saving up for a vacation, your Starbucks in the morning, you're eating out. 20% of your income is suggested that you allocate towards savings and debt. So you do want to set some funds aside to build your savings, whether it be for retirement, for emergency readiness plan like we mentioned earlier, or maybe just a savings goal for a holiday or maybe an exciting life event that maybe you have coming up. Now, something we do want you to note is everyone is different. Your needs and your wants might be different from somebody else, so know that you can always make adjustments to your allocation of funds. Anytime there is a significant life event, maybe you get married, maybe you have a child, maybe you have a new job or move and get a new home, you'll want to update and modify your allocations. We do suggest that you update and modify at least once or twice throughout the year, but especially when you do have a life-changing event, you'll want to update your allocations. Managing your debt to help your cash flow. Debt is a big part of budgeting and you want to get in control of that also. Consider making different payment methods. Maybe if you have a lot of different credit cards and you're having trouble staying on top of them, try paying off the credit cards that have the highest interest. Focus on that credit card that has the highest interest, pay a little bit extra on that debt until you pay it off, and then go on to the next credit card or loan that might have the highest interest. Another payment method that can help is paying off the debt that has the smallest balance. Focus on that smallest balance, pay that off, make extra payments. Once you pay that off, go on to pay off the next debt with a higher balance, and so forth. Another option is to consolidate your debt. If you have too many loan payments and you're struggling to stay in control, consolidate your debt into one loan, maybe a personal loan. Pay off all that debt and you'll have one monthly payment with one personal loan, for example. You'll have a fixed monthly payment and you'll have a fixed rate for the term of the loan, and you know that you'll have it paid off within the end of that term. Also, you might want to look into a credit card balance transfer. Sometimes you might find the opportunities with a lender to transfer the balance on a credit card where you're paying a really high interest rate into a credit card where you might have a promotional rate. For example, maybe 0% or something really low. Those are opportunities that you definitely want to take advantage of, but always read the fine print and understand what you're getting into, as that option might be for a certain time frame. You want to make sure you get that paid off before that ends so that you don't end up paying more interest in the long run. Lastly, another option would be to refinance a current loan. Let's say you have a vehicle loan and that vehicle has really good equity on it. You can possibly borrow against that equity, refinance that loan, and pay off other debts that you might have with that cash out you receive from the equity. Credit is very important. It's the biggest factor in determining whether or not you'll be approved for a loan. It also determines the rate that you'll pay on a loan. It also impacts the rates you might pay on things like auto insurance, although it is not common in every state. And as more commonly known, it does affect the down payment you might be required to place on a vehicle loan or on a mortgage payment. So what impacts your credit score? The biggest factor is payment history. Make sure you always make your payments on time. Automate your payments, set them up on automatic transfer, out of sight, out of mind, and you'll know your payment is taken care of each month. Amounts owed. You want to keep an eye on the capacity of your credit. As you use your credit and charge your credit card, keep your capacity to a 30%, no more than 40% of your credit limit. Length of history is also very important, and it does impact your credit. You want to make sure that you keep your oldest credit line open. If you received a credit card when you were younger and you may not use it, don't close it out, keep it open, use it here and there for gas or utilities, pay the balance, and keep that on your credit so it shows up on your credit history. New credit also impacts your credit score. You want to make sure you don't apply for too much new credit within a short period of time. Pace yourself. Apply for credit when you're trying to build credit, and wait down the line maybe 6 to 12 months, apply for new credit. Types of credit used. You want to make sure you have a mix of both your revolving credit and your installment credit. Keeping a mixture of both types of credit, revolving and installment, and showing that you're able to manage them will impact your credit positively. So we've talked about budgeting, we've talked about managing debt, and staying in control of your credit. We definitely want to touch on preparing for your retirement. The sooner we start saving for retirement, the more we'll gain at the end. So what are your options? When it comes to retirement, you can put your money away into a liquid savings account. You can also put your money away into a long-term investment account, for example, an IRA, stocks, or bonds. You definitely want to take advantage of a 401k if it's being offered to you by your employer. A 401k is for retirement purposes. It's a retirement investment account with your employer. Traditionally, your employer will match up to a certain percentage. So where do we go from here? Create and modify your budget as needed. Manage your debt and stay in control of your credit. Also, build your savings and try to put away at least 10 to 15% of your income to build it. Partners is always here to help. You can take advantage of in-person or virtual workshops. We do offer competitive loan options, so if you're looking to refinance or consolidate your debt, we can help you with that. We also offer free one-on-one financial consultations where you can sit down with a certified financial counselor and talk about your individual financial obligations and your savings goals. In addition, we have free one-on-one consultations with our retirement and wealth management team. We can schedule those in person or virtually in the Anaheim, Burbank, or Orlando areas. And always know that Partners can offer you various savings options. We encourage you to take advantage of our Partners Wellbeing platform. It's an innovative and engaging source of financial wellness and education. You can find topics like budgeting, emergency funds, financial stress, managing debt, saving for retirement, repaying student loans, and so much more. Thank you for watching, everyone. Just remember, we are your financial partners for life. We have products, services, and educational offerings for whatever stage you are in your financial journey. Thank you.